Hi everyone, let's go over my bullish and bearish Elliott Wave scenarios on Bitcoin and explain why the stock to flow model is not going to help you out this time, but Elliott Waves will. Now, just to understand the basics of Elliott Waves, what we are looking for are 5 waves towards the upside, followed by a 3-wave corrective structure, and then we look for a continuation. Now, those 5 waves towards the upside are here labeled as wave 1s. So here we have a 1 to the upside, a 5 wave, 3 wave, 5, 3, 5, 3, looking for another 5. So in the most bullish scenario, which is what you see on the chart on the monthly time frame on Bitcoin from an Elliott Wave point of view, we are looking for a multi 1, 2, 1, 2, 1, 2, currently looking for another wave 1, 1, 2, 3, 4, 5 wave structure, finishing your wave 1, and then we look once more for a 3-wave corrective structure to the downside in a wave 2 and continue towards the upside. The invalidation for this scenario is price moving below 15.4k. Now, if we want to get a better idea of when the bull market for the white wave 1 is going to top out, we have to compare the current bull market in time with the previous 2 bull markets. And what you can see is that the second bull market here labeled in green is actually a little bit shorter in time compared to the yellow bull market. The vertical lines are Fib times comparing waves with one another in time. And the green Fib time here is taken from the start to the end of the yellow one to the end of the yellow 2, comparing yellow 1 with the green wave 1. And you can see that the green wave 1 topped out around the 786, which is below the 1, and therefore we know that this bull market here is shorter in time compared to the yellow wave 1. Now, if we then compare green with blue, then you can see that the blue bull market over here was exactly the same amount of time as the green bull market. A Fib time taken from the start to the end of your green 1 to the end of your green wave 2. Now, keeping this in mind, the 0.786 and the 1-to-1 being targets of previous bull markets, we can now pull a Fib time from the start to the end of your blue wave 1 to the end of your blue wave 2 to get a bit of an estimation for your white wave 1. Toggling on the 0.786 and the 1-to-1, it gives you a target for an all-time high for the white wave 1 between March 2025 and October 2025. Now, we can do the same with regards to getting a price target. If we pull a trend-based Fib extension in blue here from the start to the end of your green 1 to the end of your green wave 2, comparing the price movement in this green wave 1 with the blue wave 1, then you can see that your blue wave 1 is actually a little bit shorter in price on a logarithmic scale, hitting the 0.618. If we then do the same for the current bull market, I can pull a trend-based Fib extension from the start to the end of blue 1 to the end of blue 2, and here you have it, the 0.618, giving you a target at about 105k. Just for the sake of flexibility, I also like to include the 0.786, which then sits at 176k. Now, we know that this white wave 1 has to be a 5-wave structure, 1, 2, 3, 4, and looking for another wave 5 towards the upside. But a wave 5 by itself also has targets. So if I then open the wave 5 targets, calculated by using only this structure here and something I generally talk about in my daily updates, then your target area is going to be just a little bit bigger. Your minimum target for the white wave 1 would be 81k, and then your highest target for wave 5 based on the weekly and the daily time frame analysis would be about 130k. So this then leaves us with a most common target for wave 1 being between 81k and 130k, with a bit of a less common target being between 130k and 180k for this white wave 1, after which we are then looking for a 3-wave corrective structure in 2. Now, this means that this wave 2 has to retrace to some interesting Fibonacci levels, and again we are going to use historic price action to get a better idea of where this wave 2 might retrace to. Now, when we look at the previous retracements, then you can see that the green wave 2 retraced to the 0.382 Fibonacci taken from the start to the end of your green wave 1. If we pull a Fibonacci from the start to the end of your blue wave 1, then you can see that price retraced to the 0.5. So the retracements are getting deeper, and just for information's sake, the yellow wave 2 over here retraced to just above the 0.236. So it's 0.236, 0.382, 0.5. So again, keeping this trend in mind, it makes sense that this wave 2 here retraces to at least the 0.5, and this 0.5 here is taken from the start to the 180k 786, 170k to be exact, giving you a target of 52.4k being your highest retracement level. The 0.618 on the chart is added because each retracement so far moves to a lower fib. The 0.618 is taken from the low to 81.1k, and therefore it gives you the biggest range that you can get for potential wave 2 being between 52.4k and 29.2k for your wide wave 2, after which we then look for a move towards the upside, another 5-wave structure, 1, 2, 3, 4 and 5. Now, a final thing that I like to talk about is time related. So on the chart now, you see a red 0.5, and this 0.5 is a fib time that is taken from the start to the wave 1, which is October 2025, and then your third click is going to be back at the low over here, and then you toggle on the 0.5. And what I want to do here is measure how far are we in time from the start of the bull market to the potential maximum end being October 2025. And you can see that we have already passed 50% of a bull market based on historic price action in time. Now, this is interesting because the most bullish scenario on a daily/weekly time frame here would be a double 1-2, right? 1-2-1-2. You look for a very big wave 3, 4, 5, 4, 5, right? Creating a very big impulse, 1, 2, 3, 4, 5 wave structure, and then you will reach higher targets. However, if these are counted as wave 2s, we expect a very big wave 3 up, and then most commonly your wave 4s here are going to be longer in time compared to your wave 2s. But that then means that this wide wave 1 is going to be way longer than any previous bull market in history in time. So therefore the probabilities would be a lot higher at the moment on the monthly chart to count this as a wave 1, 2, 3, 4 and a wave 5, topping out in the price and time area for your wide wave 1 based on historic price action and the previous bull markets. This is your most interesting area, and then look for a retracement to the downside. The probabilities would have been a lot more bullish if we would have created a 1, 2 and another 1, 2 before even reaching the 0.5, leaving enough time for a big wave 3 and then a 4, 5, 4, 5 to still end at the 1-to-1 fib time in October 2025. But just because we have already passed the 0.5, the probabilities went down for a double 1-2 and increase for simply a 1, 2, 3, 4, 5 wave structure. The previous scenario is your most bullish scenario. You look for another 1, 2 and continuation to the upside. However, as an Elliott Wave analyst, you always need to also have a bearish scenario, and I have two scenarios prepared for you. The first one is this one here, 1, 2, 3, 4, and we look for a bigger wave 5 to top out, after which we then expect a much bigger corrective structure and also much longer in time. The target for your wide wave 5 here in the final blue 5, so that is 1, 2, 3, 4, 5, is between 91k and 157k, and this Fibonacci is taken from the high of 3 to the low of your wave 4. The invalidation for this scenario is price continuing towards the upside and hitting $371,000 per Bitcoin. Now, what does impact the probabilities for this scenario negatively is that your wave 4 here is a little bit shorter in time compared to your wave 2. If we count this 1, 2, 3, 4 and then a wave 5, most commonly a wave 4 is longer in time than a wave 2. And you can see here the low of this bear market was made before the 1-to-1 fib time taken from the start to the end of 2 to the end of wave 3. Also, if we then look at this move towards the upside, then we have this internal 1, 2, 3, 4, 5 wave structure, and wave 3 is extended. It moved to the 1.618 trend-based fib extension taken from the low to the high of 1 to the low of wave 2 if you want to check it on your own chart. But if a wave 3 is extended, then most commonly your wave 1 and your wave 5 are going to be relatively equal in time and price, which is not the case because this wave 5 here is much longer in time compared to your white wave 1. If you take a fib time from the start to the end of 1 to the end of wave 4, comparing 1 and 5 in time, then you can see that preferably your wave 5 would have ended somewhere around the 1-to-1 here, which was May 2023, and here we are in August 2024, right? So it does lower the probabilities for this particular scenario, but it is good to keep in mind, and you can see that the area of interest for a rejection is quite similar compared to the bull market over here. As you can see, I now included the bull market price targets next to the target over here for your wave 5, and there's a lot of overlap. So it's all about that retracement towards the downside, which is going to give us all the information that we need. And then we have finally this bearish scenario here, which is the lowest probability scenario though, 1, 2, 3, 4, 5. We have already topped an incredible big 5-wave impulsive structure, and we are now looking for a very big 3-wave corrective structure before a continuation, and we are therefore in a wave B or X, preferably actually already finished, looking for a wave Y or a wave C to the downside, where your wave Y minimum target would be about 30k and your wave C minimum target most commonly would be below 15.4k, but then again it at the moment does have the lowest probability. So if we then finally look at the probabilities of these different scenarios, then currently the highest probability scenario is the bullish scenario here, where we are looking for another wave 1 to top out somewhere between 81.1k and 176k. Most common target would be 81k to 130k, but the flexibility gives us a little bit of room to 180k. The second scenario would be topping out in a very big wave 5. The first bear market scenario I've shown you here. The target for price is pretty much the same, and it's then all about the retracement that we get to the downside. And then on the number 3 position, we have this scenario here where we are in the middle of a bear market and then look for continuation towards the upside. I hope that this video was helpful or valuable to you. Please check out the brand new complete Elliott Waves guide playlist I've made that shows you all you need to know about Elliott Waves. Thanks for watching and subscribing, and I'd like to see you at the next one. Bye bye.